You need to have structure. You need to have a set of rules, yeah? So price action to use to filter out the randomness is very good, but not just to rely on it saying it's better than any indicators. It still has to be used in conjunction, with a strategy plan, support and resistance and so forth, or key levels to keep people, focused. Grounded. I've never met a random trader that you just come in.
Welcome back, everyone, to I'm sitting down with Andrew Lockwood, someone with over 30 years of experience in the market. We're going to be talking about his tips, his experiences, stories in the past, things you can learn from him. So welcome to the podcast. Andrew, how's it going today?
Brilliant. Thanks very much, Etienne, for having me on to your world-renowned podcast. Delighted to be here. Looking forward to it. Thanks for the invite.
Good to connect with you. So tell us a bit more about kind of who you are and what you do these days as a trader. And I'm sure you do a lot of other stuff on the side too, but tell us kind of a bit about what it looks like.
Well, yeah, you did allude to it there, Etienne. I have been trading for over 30 years, which is must be before you were even born, I would have thought. But I started in the city of London many years ago, straight out of school, basically. So at the early age of 18, straight into the London Stock Exchange with very little qualifications. Sort of jumped out early, got a job as a little T-boy type of thing. I made my way onto the London Stock Exchange floor at 18, did my exams, and I migrated onto the futures exchange. So I've been a pit trader for about 20 years on the London International Financial Futures Exchange. That's basically where I started trading. So I was in the trading pits, shouting, screaming. In fact, I always have these in my backdrop, my sort of fond memory of my days in the trading pits. So I spent about 20 years doing that, working in all the different pits, from the government bond pits, treasury bond pits, and I actually moved the treasury bond market one whole point. It cost me $110,000. That's a story I can tell. We'll share with your followers at some point if you wish. But yeah, it was a lot different than it is today, Etienne. We obviously, it was just vibrant. It was shouting, screaming, screens, technical analysis, didn't have any of all that stuff. It was just purely looking at the eyes and the noise and the hand signals and so forth. And as you may know, that all went sort of automated in around the turn of the century. So all those exchanges were sort of going online and not on the screen. So I started on the screens in about 2004, really 2005. Lost a ton of money, lost a absolute ton of money, believing I was a trader, right? That's all I've ever done, trader. And then I got onto the screens and it was very, very different. So I gave it a couple of years, and then I just sort of like wound it all back and took it all back to basically what I was doing in the trading pits, which was just a very simple, form of trading. In those days, we heard the noise and we looked at people's eyes. It's just very basic. And I just wound it all back in 2005, 2006. And then I slowly became profitable just by undercomplicating it. Everyone overcomplicates it as far as I'm concerned. I'm a pit trader. How can you be complicated?
Awesome. We have a lot to talk about for sure here. That's a lot that we can talk about. I can't imagine the difference of going from the pit to screens and charts and stuff. Must be crazy. So we can definitely cover that. But let's go back in time. I want to go back to the beginning. And how was it like for you to kind of start trading in the pit? What was it like to kind of begin in trading exactly?
It was the most fun time that I've ever had. I don't know. It's just like being in a bar or in a club all day long with your mates, and you're just chucking around hundreds of thousands of dollars on a daily basis. Mainly, there's different ways you could be a trader down there. You could either work for a bank or a broker, or you could work for yourself. Different color jackets. The red jacket is when you work for yourself. You become a local. But it was just like we were just young guys we got paid a lot of money. We were getting paid a lot of money in those days. I'm talking about the late 80s, 90s. More now than sort of cabinet ministers are earning here in the governments and so forth. And we were just young kids, So we had all the you've seen it on TV. That sort of the films, the trading places, and all that stuff. It was literally we were the young guns with lots of money, and it was just real fun. And everyone used to think you get burnt out. They will say you're going to get burnt out by the time you're 30 and all that. I didn't find that. It was just so much fun. It was absolute joy to going to work every day. The market used to shut at about 4 p.m, and we couldn't go home until all your trades matched. Right? It wasn't like now when you trade and it's matched straight away and so forth. We literally had trading cards. You had to put your trades on these trading cards, and these would have to be matched into the system. You buy it on one, it sells on the other. And then the juniors would put them in the system, so you couldn't go home until all the trades matched. So we'd generally be in the sort of bar afterwards, chatting away to how much money we made and how much we lost, and you do that trade and me, and it was just all fun. There was no sort of animosity, because tomorrow was another day and we'll have another go tomorrow. But it was real fun. And also now we have the non-farm payroll and we have all these big events. And now you're sitting here. Almost every time I'm sitting here trading these news events, and we do the live streaming as well, it always just reminds me of the time when I was in the trading pits. Non-farm payroll wasn't actually a big event in those days. It was more like trade figures and GDP numbers and inflation numbers that got us going. But like 5 minutes before the announcement of one of these economic releases, you could almost touch the excitement. There'll be just it would just be like a so everyone would be nervous and sort of excited, and the energy when it came out, it was just such fun. I mean, I miss it dearly. I mean, now sitting here in front of all the screens, and I get the score tells me 30 seconds before the announcement. It's not so exciting anymore. You just see the candles going up and down. But I think they say, I don't know about yourself, how long you've been trading yourself, but for me, it's trading's in your blood, right? If it's in your blood, I don't think you ever lose it. And it's been in my blood since I left school. I remember just even before I left school, I was, that's all I wanted to do. My careers master. I want to be in the stock exchange. And, I'm sort of in my 50s and I'm still doing it. I mean, someone asked me the other day, would I want my kids to do it? Because I'm obviously educating other traders as well. And, and I thought to myself, I'd love them to do it in my day, whether I'd want them to doing it now, sitting here. My daughters are all like 14 and what have you, maybe do something else before they start trading, at 14 years old. But I mean, I think it's a fantastic career and I love it. So, yeah.
How was the learning curve back then compared to what the learning curve could be today, as someone who's like learning at home, trading on the screen? How did you learn back then compared to today?
At the end of my sort of time on the trading floor, I used to, if I was a deputy floor manager, actually at Lehman Brothers before they all went to the war. And I used to obviously employ traders, and we'd have interview times. If we needed some traders, we'd employ them, and and I'd often do interviews, and I wouldn't do them in an interview environment. We'd literally go over to the CAF or something like that. They'd come there with their files of resumes and all that. Wasn't interested. I could tell very quickly, sitting down having a coffee with a guy or a girl, whether they had it to be a trader. It was more of a desire, more of a self-confidence in those days than it is now. So in those days, literally, we could employ someone. They had what it took. We literally just gave them a brief understanding of how the hand signals worked and what have you. Shoved them in a demo trading pit. We used to have demo trading pits as well. See how they perform. It was and you could tell pretty quickly. There's one thing that has, from there to today, there's one sort of element that hasn't changed, and that's the appreciation of risk. Okay, because obviously we were trading, millions of dollars, young kids trading millions of dollars of the bank's money. You had to prove you could appreciate risk, and that was obviously one of the most important factors that we would teach them. If someone was of the sort of I don't know, maybe the arrogance of maybe hiding, because you could easily hide trades. Yeah, if you had a losing trades, a bunch of losing trades, you just stick them in your pocket. Yeah, hoping that they come back. If someone had that sort of tendency, we don't want them on our team. You've got to be accepting risk, cutting your losses, moving on to the next trade. If that was the case, if anyone was like that way inclined, then obviously we'd get rid of them. But this day and age, I think the problem with this day and age is that people are coming in here with the wrong expectations. I think a lot of the time, yeah, they're coming in expecting to become city traders or bank traders, or trading, giving up their day jobs with, because they've seen it on a YouTube channel and think they can do it. I don't think they appreciate sometimes that they need to put the work in. Why would they not? I look at it, any other job in the world, a decent sort of professional job, it takes 3 or 4 years of training. I mean, trading is the same. You need time to sort of get your head around exactly what the business is all about in terms of risk, in terms of strategy, in terms of personality, in terms of the psychological stuff and what have you. It doesn't come overnight. So I think in those days it was a bit quicker than it is today. And I think that's one of the reasons why today there's such a big fallout of traders, because they don't really give it the appreciation I think that it deserves. That's my opinion on that.
Did you have people back then coming at the pit expecting to get rich from trading? Did they come to kind of get a job expecting them to get a high paycheck and like succeed from there and stuff? Or was it not really a thing back then?
I mean, a lot of the guys that came in, we didn't have, the education wasn't the issue. They were just hungry. And to get a job with a broker or a bank, and that's basically just getting your monthly paycheck and your bonuses, still very, very high, compared to, you had these kids, as I say, earning, more than government ministers at a young age. So that was high anyway. But to make the serious money, that's when you have to become a local trader. Like we are now, trading our own money, i.e. with the red jack. That's when you make the serious money. You put up your 50, 100 grand into the account, and a lot of traders would do that. They'd migrate from the brokerage, they might be on 150, 200 grand a year on a salary. They'd try to become a local trader and they would disappear pretty quickly. You wouldn't see them again. Literally, you wouldn't see them again. They'd blow their account in a day. Not like, we might, you see traders nowadays that you might blow 10%, you think, what have you, but people could be blowing 50 grand, 100 grand accounts, blowing their account in a day, and you wouldn't see them for very long. So yeah, you did have those that were arrogant like that, but again, it's the same as what we have now. I mean, you have to respect it, respect the market. This in those days and today, it's not a free ATM machine. It's people that don't respect it in those days and in today's climate that basically don't live for very long in the markets. And that's that, and that hasn't changed. But yeah, I mean, it was. But for the successful ones that really made it, I only went local for the last 2 years, but we were, literally seeing guys at 2022, I mean, they were worth 50 million pounds, or dollars, at such a young age, and it was crazy. I mean, but yeah, there's always the failure stories as well, and there are quite a few of those. It wasn't just you're in the trading pits and you're made for life. I mean, in fact, oddly enough, true story. When we did sort of went electronic 2005, 2006, when I really got 2004 really. But I remember it was about 2010. My local football team here was playing at our big stadium in Wembley, and I was going to take a cab up there, take a taxi rather than getting on. So a taxi pulled up. Guy picked me up. And he said, my name on the trading floor was called Charlie, after Prince Charles. And he goes, "Is that Charlie? And is that Lance?" I said, "Lance, what do you do?" This Lance chap, he was a multi-millionaire on the trading floor, multi-millionaire in the trading pits. He was a big shot in the trading pits. He had everything. He blew the lot. He's now driving a taxi, me to Wembley Stadium. And he's driving. He said, "Charlie, I lost a lot on the screens. I mean, some success stories and some real sad stories as well. But yeah, it was a good part of my life, as it were. And I think people still find it still fascinating, don't they? I mean, because people now, it's all about screens, isn't it? But the old days where it all began, it's still fascinating, really. Yeah,
definitely a big difference. What do you think made the difference between the guys who succeeded as local traders and the guys who didn't? Was it like a mindset thing? Was it more like what they traded, or was it something else that differentiates the winner from the losers?
It was definitely mindset thing. It's definitely being able to cut losses. The problem in these days is that you can hide it. Yeah, no one knows when you're trading, apart from you and maybe your partner. If you're having a bad day in the trading pits, if you were having a stinker and being an idiot, everyone would know he's losing the plot over there in that corner of the pit. He's losing the plot. He's hemorrhaging, and he's, and so it was pretty apparent when someone was having a rotten day. So that almost kept you a little bit sort of, grounded a little bit because you know that everyone else knows what you're up to. I mean, you can go out and say you can brokerage out some of your trades as well to another outfit. But I mean, if you're losing it in the trading pits, it was something that pretty much people could see. So it sort of kept you grounded a little bit at the time. I mean, one of the things I used to do, which we can't do anymore, which is why I found it such of a struggle in 2004 when I came onto the screens. Certainly as a local trader, when I was using my own accounts, I used to look at people's eyes. That, for me, looking at a broker coming into the trading pit, he's looking potentially to sell the market. Yeah, say it's Goldman Sachs. He's coming into the market. He's standing there, and he's looking at all the guys with their hands out like that. Now, all the guys with their hands out, they are the buyers. Yeah, and he's just looking. He's counting up how many he can sell if he wants to sell. So I'm looking at him, and I'm looking at all he's doing. He's looking at the buyers because he's a seller. So I know that Goldman Sachs is about to come in and sell something pretty big because all that guy's doing is looking at where he can sell. So I chuck out my little 10 contracts, nothing, pond life compared to them. I'd take out my little 10 contracts. Goldman Sachs will come in, bang, 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 sold. I buy my 10 back. I'm done for the day. Just by looking at people's eyes. I don't have that edge now in the on the screens. So there's a big difference in sort of what we were able to do to see the markets, and also the noise. And one of the strategies I teach is basically came from the pits. When the markets were trending in a massive direction or really, really strong trends, the noise of the trading pit would normally, there'd be like a big crescendo. I mean, a big noise, and the noise levels would increase. That normally meant the market was moving in a particular direction. You didn't normally have a really loud trading pit if the markets weren't doing very much. Yeah. So now we see the big momentum candles, but we used to have the noise, and often when the noise dissipated, that's normally when the trend, might have been a 15-minute trend or even a 5-minute trend. That's normally when that move would come to an end, and all the buyers would be looking then to take their profits, and all the people there that will be scrambling to cover their shorts, they're out because they've covered their shorts. And when you had that sort of quietness, that's normally when the market used to come back down for a few percent, or a few pips, or we used to call them ticks at the time. But so one of my strategies is basically that is looking at those momentum candles at these big levels where the noise would dissipate. I mean, that's one of the sort of techniques that I use in the trading pits, and something that I sort of moved onto the screens, and one of the strategies that we talk about, which is basically looking at price action, not looking at RSIs and moving indicators and moving averages. We didn't have any of that stuff, but yeah, I mean, that's one of the reasons why now I don't really use too many indicators these days at all. Really, now it's all price action, that sort of very technical levels, which I think is the closest I can get to the pit environment, if you like.
When you went to digital, did you like bring all these indicators in to try to look at what they helped you do, or did you kind of just keep indicators aside for almost like the whole time?
No, that's my problem. To be honest, when I came in, I learned all about all the technical indicators, and I think I've done a couple of videos on YouTube, that showing the screens. By the end, you have so many indicators on the screen, you don't know what the price is doing. I stripped all that out. So although we used to have a morning meeting about 6:30 in the morning before the pits opened at 7. German markets opened at 7. And we'd have a guy came in, and he talked a little bit about RSIs and a bit about moving averages. Normally we looked at the 200 moving average, but we didn't have all the stochastics and MACDs and Bollinger Bands that we have these days. But I came onto the screens, and I thought that was basically what everyone was doing. I mean, and I really struggled with it. I was like a lot of traders these days, just putting on another indicator, trying to avoid the losses, and then you make money, and you think you've cracked it, and then you have the losses again. So you put on another indicator, and off you go again, and then you have some winning trades, and then you lose again, and then you come on, let's put on another indicator. That's got to be the right one. So I spent 2 years, a lot of money. I hate to think. Well, I know exactly what it was, but a lot of money expecting the indicators to give me the magic, and it didn't. I'm not saying don't use indicators, but I just think people that are looking for a magic set of indicators that you can put into a big cauldron, and it throws out a strategy that you can plug and play and never, worry about, working again. People that do that are just, unfortunately, will end up learning the hard way. And I did learn the hard way. Again, I'm not anti-indicators, but don't believe there's magic in the indicators that no one else has found. Personally, trading, as you know, is much about the mindset. You can give a perfectly good strategy with an edge to two different traders. One's going to blow the account, and one's going to make a nice little monthly return on it. So it's all down to the people, really. I think that was a big learning curve for me, certainly in those days. I was lucky I didn't give up. I mean, I was close to giving up in 2006, really. I wasn't married. I didn't have anyone. I wasn't responsible to anyone. But it was close to give up. But thankfully, I stuck with it. And now I love doing what I'm doing. I mean, I'm a bit older than most, and as we know, sitting at home in our screens and what have you. So I love now talking about markets. As I'm thinking, maybe you might have gathered, I love talking about markets and have you. So now we run a trading community basically doing that. So it's great for kills the boredom of it, because quite frankly, when you do it for 30 years, boredom could set in. But I love doing what we do now still. Yeah,
I think indicators had their time, and I think it's still people use them and love them a lot, but a lot of people are kind of getting more into price action, like you mentioned, and that's a topic that we can definitely focus on. What do you think that people don't succeed with price action? Because there's so much stuff in price action these days that wasn't there like 10 years ago. What do you think of price action now? What do you think people still fail with price action these days?
Well, there's two sides to that. People come in, they love the indicators because it's like a traffic light. Yeah, if this does this, if this gives me a green light, and that is a crossover, and the RSA cross, then it's like there's no ambiguity. And a lot of traders, love that, and they've obviously, put their sort of trading strategies around that. Price action, there's a bit more ambiguity in about it. No real market is the same. There's no real, chart that you can look back in 5 years ago and say that's exactly the same price action. So I think the problem with price action for many traders is that they haven't maybe got the sort of haven't got the screen time so much, and they doubt it when they have a few sort of bits of price action that doesn't work for them. At the end of the day, price action is telling us what the mass market is doing. Yeah, it's just telling us what the mass market is doing there and then on a candlestick or a bar chart. It's telling us what's happening at the time. Doesn't mean it's going to happen. Doesn't mean it's going to happen again next time. But people thinking that price action means it will happen again, that's wrong as well. Price action, I think, should be used to filter out the randomness of trading. You need to have structure. You need to have a set of rules. Yeah. So price action to use to filter out the randomness is very good, but not just to rely on it saying it's better than any indicators. It still has to be used in conjunction, with a strategy plan, support and resistance and so forth, or key levels, to keep people, focused. I mean, grounded. I mean, you can't just be. I've never met a random trader that you just come in. You've got to have, whether it's break a structure, trend. Sometimes it doesn't work. It's fine, but you've got to have a set of rules that plays out over time with a slight edge. You don't need much of an edge, to make money in the markets. People think they need a big edge. They don't need a big edge. They just need to have an edge, and let the runners run and let the losers and cut the losers. They just need to have an edge. So you do need price action, or you do need to have some rules. I think price action is better because it doesn't. I just think the technical indicators are just too traffic light systems. Well, there'll be no national debt of Venezuela if there was such a system. They would just, the central banker would just plug in an EA and trade the currency markets. So it just stands to reason that it doesn't work. There's no central bank would have a national debt, would they? They just plug in a trading automated system. So I think price action is is right because it keeps you focused with some rules to keep you focused as opposed to flying by the seat of your pants with randomness, but not believing that it is the Holy Grail. The Holy Grail is the biggest killer. The Holy Grail mentality happens in price action as well as technical, indicators. I mean, that is the killer because people are expecting to be right all the time. again, it goes back to the mindset, doesn't it? The psychology. People don't like being wrong. When you're at school and and the teacher asks you a question, you put your hand up to get noticed. You get noticed, and they pick on you and you're saying, "What's the answer?" And you get the answer wrong, and everyone sniggers and it's laughing. It's embarrassing being wrong, and no one likes being wrong. It doesn't matter how old you are. No one likes being wrong. But in trading, people have to accept that they're wrong, even with price action. But yeah, as you're right, price action has taken up so much of these because I think it's I think people are realizing that there are no magic in the indicators.
Interesting. Now there are new trends which we can talk about later for sure, which I'm curious to get your thoughts on. But getting back to price action and the levels, what do you think makes a good key level in the market? Because back then in the pit, the key level was probably a different meaning than what it is today. Or is it the same thing as it was before?
In fact, I was having a chat with someone yesterday about this. You heard of pivot points?
Yes.
Pivot points, yeah. Pivot points, yeah. People trade with pivot points these days. Right. These are called floor trader pivot points because we invented them on the trading floor because we used to be able to work them out on a calculator. Literally, and in fact, we had a girl in our booth that used to do them for me in the morning, and she would give us our pivot points, and all the other local traders would come. And what are the pivot points today? And they'd write down on their trading cards the pivot points. So all the traders have the same levels on their cards. So when everyone, when JP Morgan's would come in and buy it up, hit to a pivot point, all the locals would start selling it. These were levels that were respected because everyone had them on their trading cards. They're not always, depending how much JP Morgan's had to buy through, and they might take it up. But so pivot points, double O's, 50s, double O, that used to be called double O, a bit, because double O trades, and that used to be a level where people, and it still is the case, isn't it? Double O's. So those are the sort of like the key levels that have the pivot points, the highs and the lows, and what have you. We used to have someone in the chart in the booth as well doing point and figure charts on a piece of grid paper, X's and zeros, and she would have charts and charts of this done. I thought if she picks up the phone, takes a phone call from her boyfriend, she's missed a couple of price points in the pit. The whole charts are wrong, but people still came down to the levels of the chart. She's been asleep for half an hour. She's missed half the moves, but these are levels that people took. This day and age, structural points, big turning points, and levels of consolidation. So obviously, when you have a momentum move, that's normally led with more buyers than sellers. At some point, those buyers need to take profits. At some point, those sellers, as we did in the trading pits, they would have covered their shorts. And that normally will see, as far as I see, like a contraction. You would see it maybe on an ATR coming down, but a contraction in the levels of in the ranges. That basically meant consolidation. This is where buyers and sellers are changing direction. This is where they've changed direction and they've established a new level. That level, looking back in charts for me, is a level that will be respected again. Why? Because they've respected it there in the past. So if you have a big sort of momentum move and a consolidation period, a breakout of that consolidation period back to that level would be a level that we would look to for continuation. Sometimes, of course, that would not play, but that would be a level that would certainly have our focus. But a break of structure, I love the decreasing higher highs. So, for example, you will have a new high created. Every market has its pullback. Every market has its pullback, just the natural gyration of markets, and then the momentum carries on in that direction, but fails to make the new high. So you have I call the 1, 2, 3, 4. So basically, you'll have the third momentum impulsive move, not taking out the previous one. That's showing me that basically human behavior, that traders, the sellers now, if it's on an uptrend, the sellers now are say the buyers are losing their control. Just simple, higher highs and lower lows. That they are moving or losing their momentum. Break of that structure would indicate potentially a move back down. Just basic price action, which you can use with trend and counter trend. So levels that have been respected before, normally with consolidating candles, would be something that we'd certainly look at as well. But higher highs and higher lows, very important. Yeah. That's something you look at as well?
Yeah, it's a very similar thing. Yeah, I also noticed that a lot in the market. So definitely when you have, because I primarily trade reversals myself, so whenever you have a price failing to make a new higher high, like you mentioned, or lower low in the case of the sell, definitely kind of good place for reversals. I agree. I would wait a little bit later than that to enter, but definitely a good sign to at least spot like the trend starting to die off a little bit.
But you can also use that, you see, so if you've got a bigger, longer term trend, and you're a trend follower, say you're trend following on the 4 hour, the daily chart. Obviously, I never want to get into a trend at the top or bottom of candles, right? So I always wait for the pullback, and we encourage traders to wait for the pullback. I mean, it's very certainly when you're in trading chat rooms, everyone's buying the euro dollar, and you've missed it, and you missed it. You think, oh, everyone else is making money, so you buy it, and of course that's when it's going to reverse. Yeah, that's just normal. So we say, we're not buying the tops of candles, we're not selling the bottoms of candles. We're always waiting for the pullback. So you've got the higher time frame, the 4 hour, the daily, but you can look back on the hourly or the 15-minute chart for that pullback to have that bit of price action where you have the pullback losing momentum. So you have the pullback, and then the trend continues a little bit in the direction, but then another pullback happens, but it doesn't take out the previous pullback high. That's a good time to enter the trend with the higher time frame bias direction play. Hopefully that makes sense. But yeah, it's basically getting into a trend on the lower time frame charts using that simple price break of structure with the trend. Again, it's just a set of rules that you need to have. These are not magical rules. These are not rules that are only used by me, but you've got to have some sort of rules, I think. Otherwise, flying by the seat of your pants. I'm a private pilot. Flying by the seat of your pants is basically, you may make some money for, month, 2-3 months. You might make money for a year. If you want to be here doing this in 10 years' time, I think gut feeling. I'm not one for gut feel.
Definitely not.
I tell you what, I'm short at this moment in time. I'm short the Euro CAD. I'm short the Euro CAD from a daily setup of one of these dailies, and I'm losing money at this moment in time. I looked at it this morning and thought, this is definitely going to get stopped out. My gut feeling is my Euro CAD trade that I'm in at the moment is going to get stopped out. It's just a gut feel. I'm not going to cut the trade because of my gut feel. I don't know what's going on. I've got my stop in place. I've got my profit target in place. I might get stopped out on it. Well, it's not moving much at the moment, but I mean, so can't trade by gut feel. Stick with my rules and go with them, and accept losing trades and accept winning trades.
Tell me about fear a little bit. I'm sure you know this level anymore, but some people are having fear whenever they place a trade. They fear the trade could, like you said, kind of hit their stop loss. They could lose in that trade, and that would bring them further from their goal to succeed in trading. Therefore, they cut their trade short. And I'm sure you've been going beyond that, but you probably see people now who are in that situation where they fear losing trades and they have to cut them faster. What would you tell them to kind of do or focus on in that case?
I'm a big fan of setting and forgetting, to be honest. We all know the two sort of emotional drivers or concerns. It's the fear and greed thing. The same as that kid putting his hand up in the classroom. Yeah, he doesn't want to be wrong. Of course, if we're wrong in the markets, we lose money. Well, you've got to accept that we have losing trades. The problem with that, and I understand exactly how it is, because it's the emotions of winning and the emotions of failing. We all say you should trade without emotion, but that's impossible, right? You can't trade without emotion. It's money. It's an emotional commodity. So that will never happen. But understanding the sort of market circumstances which heighten your emotions is important, and fear is one of them. Okay, and that's really, really damaging. So we all love it when our trade hits take profit target, not only because we do get an injection of capital into the account, but it's good to be right. Everyone loves to be right. Okay? But when you're obviously trading the markets, being wrong costs you money. So what often will happen is traders will see their profit, their trade go to profit direction, nearing their take profit target, and then that profit that they've getting excited about starts to erode away. So they're fearing now of losing all the profit that they had. So they grab their profits. Now, that might be the right thing to do on that particular trade. Might be the right thing to do. But I guarantee that trader, you are going to have trades that you place and you'll never see a profit. It will go straight, either trickling down, depending on the time frame, will go straight to stop loss. So you're taking a full, if you're risking 0.5% or 1%, you're taking a full loss on that trade, and they will happen. Call it a 50-50 outcome. You're going to have trades that run straight to the stop loss. If you're taking a smaller profit because you're fearing of losing what you had as a profit, and you take a smaller profit, over the course of the year, you'll bleed money on the account. Because you'll say we have 50-50 wins over losses. You're taking smaller wins than you are ultimately on your losses. Although it might feel better for you because you've taken the loss. Oh, that was lucky. And it will happen indeed. It will happen sometimes you grab a profit and it was the right thing to do. And you think then you're really clever, yeah? I was right. I saw something in the markets that no one else saw and I grabbed my profits there. And it makes you feel good. It's just really bad because you carry on doing that and you'll end up taking small little profits and big losses. The biggest reason why people end up bleeding their accounts to zero, death by 1,000 cuts, whatever they call it. But that's basically what will happen on that. And but it's real, and it's an emotional thing. Losing money is emotional. Losing money that you haven't actually banked is also emotional, and that is one of the biggest problems that a lot of traders face. They haven't really accepted getting it wrong. They haven't really accepted the loss. That's what it is. They can't accept it. And I think that takes time. I think it does take time. It takes takes more than something you can read in a book. You have to experience it.
Right. There's a lot of lessons you're gonna get from a book and trading. You gotta get it through the market, through experience, and it's the only way to get it eventually.
Yeah. Well, as I say, I'm a private pilot. I've read so many books about flying, and I've got books up there about emergencies and so forth. I'm not going to go up and on a single engine aircraft by reading it in a book. I want to experience that with in real life with real professional pilots, and we practice the emergencies as well, so that when it happens, I haven't just read it in a book. If I'm stalling, I want to know what I'm doing because I've done it before, type of thing. So, do
you feel like being a pilot helps you to become a better trader in some ways? Because there's so many procedures when you're a pilot, so many things you got to do, like in order and stuff. Do you feel like that kind of stuff, that kind of mindset helps you a lot in trading, or is it two different things?
It does. I talk about it all the time. I mean, and we've got quite a few pilots in our training room as well, which is nice to see. And well, put it like this: you do not take off in an airplane until you've gone through a checklist. Doesn't matter how many times you've done the checklist, in your head, you go through your checklist, and even if flying commercial, I haven't got a commercial license, but even flying commercially, the pilots, when you go on your vacation, they're sitting up the front there, they're going through checklists, and one bloke is checking the other bloke. The two pilots at the front are checking each other, because anything that might happen could happen. So, and trading is the same. Traders that have checklists, making sure that that they are, well, not keep grounded. Maybe that's the wrong word in this analogy, but checklists and discipline, I think, is really important. I mean, and obviously, if you're undisciplined in the markets, you end up losing money. If you're undisciplined in the air, well, I think you can complete that sentence. It's a bit more of a concern. But so yeah, it does help, definitely. Just discipline, and it really is discipline, mental control, very important. Yeah.
So, what's your motivation now, being a trader for 30 years, to keep trading? Is it the passion for it? Is it something where you have different goals with it, or what kind of keeps you going with this?
As I said earlier, trading is in my blood. I now, for the last 6 years or so, I have been involved in this education space. You may have gathered that I love talking about markets and I love talking about this, and so I really enjoy that. I'm at the age now where I'm not so, I'm not chasing the salary anymore. I'm not chasing the monthly money so much anymore. So keeping myself involved in the markets, helping other people. Of course, I'm not a charity. I run a trading school, and of course, I educate other traders and so forth. And of course, it keeps me very busy, more busy than I've ever been in my life. So, helping people, I get a sense of achievement out of that. So, if someone goes through the education, gets a prop funding account, and then starts to make a living, well, of course, I've taken an income from them to get them to that place. So great, that's fine. It keeps me going. But the satisfaction I get from seeing someone that's actually making some money is actually, that's a tick on my box if someone's done it. Yeah. Not everyone obviously does do it. I mean, does make it. If they've listened to, some people will never make it. That's just unfortunate. But if I can change someone, that is a a vote of confidence for me, and I take pride in that. And in fact, my fellow educator here at the City Traders, he sent me yesterday on the we have Slack or whatever. He just sent me the trade journal of one of his students. Yeah, and it's looking great numbers, great profit factors, great expectancy, and he's been trading him. And he was saying how super proud he is of this guy that's doing this. And this guy came in, he's a really young bloke, he's only 22 years old. And he's coming in, he's doing really well. So we take pride in someone doing well. So that's the motivation for me. But as I say, I'm not a charity. I don't want people to think, oh, he's just a charity. No, it's not. We run a business. And for me, running a trading business, and we obviously fund traders now as well, is my motivation. And the other thing is, I can't play golf. So, that's what else do I do?
And it's definitely inspiring to see people get good results in trading also. It's very inspiring to see people progress and kind of crush their goals sometimes too, and go beyond the mindset they had before. Very inspiring. I totally agree with that. So yeah, good job on doing that.
Absolutely. That's awesome. It really is. Certainly, when you get to my age, you feel you've done, some good, and it's a reflection of you as a person if you've got someone to where they want to be. So it's not only good for them, it's also a reflection of you. And we all like to better ourselves, don't we? It doesn't matter what age you are.
So where can people find you now, connect with you, or reach out to see what you're doing after this episode?
Yeah, sure. If they want to come over and see what we're all about. So I run a trading community. It's called there you go. I do wear this all the time because I stream live around the clock, not around the clock, a couple of times a day. So the City Traders, we basically have a trading community where we educate lots of traders in there throughout the trading day. We do live streaming throughout the trading day, lots of education content. So head over to the City Traders. But the other thing is, Etienne, is one of the biggest reasons, and I know you've experienced this as well, why traders do fail when they come into the markets is because of, well, one, they don't know what they're doing, but more often than not, they're underfunded. Yeah, they don't have enough money, and they end up trying to blow it out, knock it out of the park, blow it all away with just $500 in the account. That's a big problem for a lot of people. So we've also got the funding option now as well, where if you can trade, we'll fund prop firm pretty much like yourself as well. So I think that's a big change, a massive change over the last 2 or 3 years in this route. Really accessible now for people that wouldn't maybe have that access before. If you can prove you can trade, you shouldn't be worried about a $500 float or $1,000 float. You've got access to much decent size accounts. When you've got a 50 grand account, you only need to make 2 or 3% a month. When you've got such low targets, the pressure comes off. But a 50 grand account with a 3 grand, with a 3% target or 5% target, or 100 grand account, it's serious money then again. So that's a good reason. So yeah, if they want to come over and check that out as well. But I know you've got a prop as well. So, but I do think it's a great option for traders with that are coming into the markets for the first time.
Yeah, definitely. We'll put the link below for that for people to check it out. Connect with you directly there on your website and on social media as well. I know you do a lot of YouTube and stuff, so people can connect with you there for sure. And I appreciate your advice here, Andrew. I think that was useful and really cool to hear about your experience. Your stories were awesome for sure. And something I love to hear about also, love you talk about that stuff. So it's good. And hopefully you can connect in the future and discuss that more in details. I'd love to catch up again.
Etienne, really appreciate you having me on your podcast. Maybe I'll have you on mine as well in the not too distant future, because I know I've been watching your stuff as well. Super stuff you're putting out there. You're one of these ambassadors of this business. There's lots of, as we know, snake oil charlatans out there. There's a handful of people that I respect in this environment, of which you are one. You're not peddling the nonsense that a lot of people are out there peddling. So delighted to be in your podcast as well. So thanks for having me on.